Hello, my name is Adam Stimpert, and on behalf of Tulane University's Burkenroad Report analyst team, including Emily O'Daniel, Brandon Seckinger, Sophia Sharp, and myself, we would like to welcome you to our presentation of Burkenroad Report's continuing coverage on Rollins Incorporated. Rollins trades on the New York Stock Exchange under the stock ticker ROL. Our team estimated a 12-month target price of $24 per share, which is a marginal increase from its price of $23.19 per share on November 6, 2012. This increase is consistent with the Burkenroad Report Market Perform rating. During this presentation, I'm going to describe Rollins' company profile, highlighting the major subsidiaries and the financial standing of the company, provide a look at the industry Rollins competes within, give an overview of Rollins' recent stock performance, break down the ownership of the company in the shareholder analysis, forecast Rollins' future strengths and obstacles in our investment thesis, and conclude with an explanation of our derivation of a 12-month target price in our valuation. Rollins is a holding corporation and a leading consumer and commercial services company based in Atlanta, Georgia, providing essential pest control services and protection against termite damage, rodents, and insects worldwide. The company operates through 5 large wholly owned subsidiaries, including its largest subsidiary, Orkin. Rollins was founded in 1948 by brothers John and Wayne Rollins and is still run by the Rollins family today. The company operates from over 550 locations in the United States, Canada, Central America, the Caribbean, the Middle East, Asia, the Mediterranean, Europe, and Africa to service over 2 million customers globally. Rollins is a small-cap company with a market capitalization of $3.48 billion and a strong balance sheet. Going forward, large cash reserves and zero debt will allow the company to pursue acquisitions, maintain dividend growth, and take advantage of share repurchase opportunities. Rollins relies on growth through acquiring strong companies in the pest control industry, beginning with Orkin Exterminating in 1964. From 2004 to 2010, Rollins acquired Western Pest Services, Industrial Fumigant Company, Home Team Pest Defense, Crane Pest Control, and Waltham Services. Orkin contributes to 2/3 of the company's revenue, with Home Team following at 12%. Home Team Pest Defense is unique in that the subsidiary offers built-in pest control systems to new housing developments, and services aren't rendered until after the purchase of the home. The subsidiaries contributing smaller amounts of revenue are regional companies such as Western Pest Services, offering services from Virginia to Connecticut, Crane Pest Control in Northern California, and Waltham Services in New England. The environmental and facilities services industry, including pest and animal control services, generated estimated annual revenues of $11 billion among approximately 22,000 businesses. Revenues for the industry are driven by seasonality as a result of bugs' increase in activity during warm months. Current trends in the industry that also drive revenues include macroeconomic factors such as turnaround in the housing market and economy as a whole, and an increase in concern over bed bugs. Although the threat to entry is low, Rollins has an advantage over new businesses because of its high brand recognition. Rollins' direct competitors in the industry include Terminix, Rentokil, and Ecolab. Ecolab is a much larger company than Rollins, but has a comparable pest control service sector. Rentokil's headquarters are in the United Kingdom and offer similar domestic and international services as Rollins, but on a significantly smaller scale. Terminix also offers similar services as Rollins, but focuses on franchising and is not a public company. Rollins has few, if any, indirect competitors. Taking a look at Rollins' 5-month stock performance gives us insight into the recession-resistant nature of Rollins' operations. During the financial crisis of 2008, Rollins shares fluctuated very little and have experienced steady growth ever since. While pest control services are marginally more discretionary for Rollins' commercial segment, both residential and commercial revenues held firm, fortifying Rollins' stock price during uncertain times. Since 2008, Rollins' price has climbed at a sustainable pace, and as of November 6, 2012, Rollins shares were selling at $23.19. Rollins common stock is primarily owned by a small group of insiders through RFPS Management Company at 71,655,000 shares, or 49.06%. Along with the shares owned by individual Rollins executives at 7.45%, total insider ownership amounts to 56.51% of all outstanding shares. Since January 1st, 2012, insiders have sold a total of 55,021 shares. This figure is greatly outweighed by insider net purchases for the same period at 176,972, displaying management's expectation of future upward momentum in stock price. Rollins' robust cash position has allowed it to continue its share repurchase program, and consequently, insider ownership has increased over the last 5 years. In July 2012, Rollins' board of directors authorized the repurchase of 5 million shares of common stock in addition to the 7.5 million shares that were previously announced in October 2008. Over the last decade, the company has bought back an average of 2 million shares per year. We predict Rollins has significant opportunity to grow because the company has large cash reserves, competitive advantage with the bed bug research funding, and majority insider ownership. For the quarter ended September 30th, 2012, Rollins had its largest cash reserves of $93 million, a 32% increase from quarter 3 of 2011. Because Rollins finances acquisitions using a combination of the company's revolving credit line, cash, and retained earnings, this recent cash increase allows the company to focus on larger and potentially more profitable acquisition targets. Although it is troubling that Rollins has not made a major acquisition in the last 4 years, management still finds valuable uses for cash reserves through increasing dividend payouts and repurchasing common stock. Rollins has an advantage over its competitors because of the company's investments in the growing bed bug market. In May 2011, Rollins unveiled the company's plans to partner with the University of Kentucky and allocate $200,000 to conduct comprehensive bed bug research over a 3-year period. The company's decision to invest in bed bug research could drive up revenues in the future. Rollins insiders own 56.51% of outstanding common stock. As the percentage of insider holdings has increased over the past decade, we believe Rollins investors are confident in management's view that the market undervalues the company. However, the concentration of ownership within the company may cause liquidity concerns for outside investors because they could have a hard time selling shares. Because of Rollins' regular quarterly dividends and growing free cash flows, we felt both the discounted cash flow method, which gave us a share price of $23.55, and the dividend discount model, which gave us a price of $25.25, were the most appropriate to value the company. Rollins currently trades at a share price of $23.19. After valuing the company, we arrived at a 12-month target price of $24. In our valuation, we assumed improving macroeconomic factors along with an increase in the number of bed bug services. We also assumed a terminal growth rate for Rollins cash flows to be 7% and a dividend terminal growth rate to be 6%, while also keeping a zero debt balance sheet. This has been a presentation of continuing coverage of Rollins Incorporated for Burkenroad Reports. Thank you for listening. The Burkenroad Reports are produced solely as a part of an educational program at Tulane University A.B. Freeman School of Business. The reports are not investment advice, and you should not rely on them in making any investment decision. You should consult an investment professional and/or conduct your own primary research regarding any potential investment.